Hello, welcome back. So Microsoft is up quite significantly today, about 7.3% right now as I'm making this video. And we're going to be using our tool here at myinvestorsheaven.com to take a little bit of a closer look at what is going on. But first things first, examine what is going on first in the news. Of course, we can take a look at the stock news module here. And you will quickly see that UK, for instance, blocks Microsoft's $69 billion Activision acquisition. And also the company has reported earnings yesterday, as you will see. Microsoft and Alphabet beat as investors await Facebook earnings. Now, what happened exactly? First of all, UK blocks Microsoft takeover of Activision Blizzard. That's because of antitrust rules, pretty much. Because of potential concerns that it will stifle competition in cloud gaming, which does make quite some sense, frankly, with Microsoft grabbing more and more space in the market, in this specific market. So it does make some sense to potentially block this one. Now, what happened with the earnings report? There was an earnings beat here, as Microsoft is saying that AI will drive revenue growth. Remains to be seen. I think many people are too fascinated about AI. I'm not that much fascinated myself, and I happen to be pretty much a computer scientist. That's my area, my field of study, pretty much. I do think that AI is pretty great, and you can utilize it for many situations. I think that we're exaggerating a little bit here, so we should probably hold our horses a little bit and not give AI that much of a pass. I should say we should be a little bit more critical, I think. Anyway, now what happened here? We can see it in more detail. So earnings to 2.45 per share versus 2.23. That's a pretty nice beat over here. And revenue 52.86 versus 51.02. Another very nice beat again for Microsoft. And you will see some finer details here. For instance, net income rose 9% to 18.3 billion. Pretty much 2.45 as we mentioned, from 16.73 a year ago. That's pretty nice. And revenue increased 7% as well. So pretty nice. Still growing at a fairly nice, solid pace for a company of this size. And you can see finer details here about what happened with Azure, for instance, their public cloud here, how they're doing better and better overall, and how they keep growing, of course. Now, the sales of Windows operating systems licenses to device makers declined some 28%. Kind of again to be a little bit expected, as people are generally speaking moving away, I would say, from these sort of like PC systems. And yeah, you would kind of expect a potential decline here. I don't think it's the vast business that you would expect out of Microsoft. I think you would expect other things, like for instance, revenue from Azure and other cloud services grew by 27%, and that's significant. And that's what you would expect here overall for a company of this sort. Of course, you would expect stuff from Xbox, for instance, which is another big one over here, understandably so. But again, from Microsoft, Microsoft OS, probably not so much. Probably not so much. But anyway, let's take a little bit of a look at the metrics. Because is this a buy? Is the thing? Because it's actually at almost $300 right now, and if you take it back to 5 years, this hasn't declined. Like it's insane. It's one of the companies that basically hasn't declined through whatever we have been seeing so far with the Nasdaq and the overall economy. This is at about the same rate where it was like 2 years ago or so. So this is pretty great for holders, which means that it's potentially still a little bit expensive, as you can already tell from the P and price to free cash flow ratio. Now, that is not a number that is, potentially forbidding for maybe adding it to a portfolio, but it does mean that it may be a little bit more expensive than what one would like, even though they are buying back some shares. But they do make tons of money, and they do grow at a very solid pace here. So while it's expensive potentially, it is a pretty great company, I have to say. And growing at these levels, when you're sitting at 110 billion, it's amazing. We're looking at a very, very big company that keeps growing at a fantastic rate over here. This is nice. And they do have some debt, understandably so. It's not a big deal because the company is making tons of money, frankly. And you do need to be getting some data. You can use it as a tool for leverage, especially when interest rates are low. Right now, it gets a little bit trickier as the interest rates increase. And they do have some great return on equity here, and their dividend yield, a little bit of a dividend, probably negligible here, 0.8%. Now, What about the financial statements in a little bit more detail? You can kind of see, and I kind of want to show you the 10 years of display here that our tool provides. 77 billion to 198. Fantastic growth. Again, as you'll see, the company is growing at a tremendous pace. And the same thing with the net income, 21 billion to 72. That's more than 3 times of an increase here, more than 200%, which is amazing, really, really amazing through the years. Again, whoops, I have a little bit of a connection issue. Give me a second. Time for a connection loss, but okay. So, the total equity of the company from 82 billion to 166. And again, if you take it back to 10 years, you can see the whole story. The company is growing and growing. And at some point, as you'll see, they were stalling a little bit. You see over here, these years have been equity of that was about similar. That doesn't mean that the company has been growing, of course, because the debt was increasing, as you'll see over here. But as they didn't actually amass any more debt and actually brought it down, their total equity kept increasing and increasing and increasing, and now they're selling even more, and so they're doing really well. And in terms of the cash flow statement, again, you can kind of see here the free cash flow that the company generates has more than doubled in the past 5 years. Again, fantastic thing here for the company. About 65 billion is the free cash flow that they generated in the previous fiscal year. Now 62 billion, and if you take it back to our metrics page, you will see that the company is actually worth 2.2 trillion, which is very expensive for what they are generating. They do make tons of money, but it's a very, very expensive market cap, as you can understand. Now, of course, our stock evaluation tool will tell us the details about this one. The company grew 9% last year, which is less than the overall average, and again to be expected, but still pretty okay. So I'm going to go a little bit less, 5, 7, and 9% over here for my projections. And net income margins is a software company making great margins, for the most part software. And it's going to be, let's just say, what I'm going to use, I'm going to use 30, 32, and 34 here. I go through these ranges here that the company has been doing. And the free cash flow margins that I'm going to use about 100%, typical. So I'm going to go a little bit lower, 90, 95, and 100, an annual return of 13%. And let's see what we get for Microsoft here. And as expected, it's expensive, and I'd like it to be less than 200, frankly, if not about 150 for me to potentially enter. Now, will that ever happen? Maybe not. But at this price, it's a little bit more expensive than I would like. If it goes back to 200, it would be something to discuss for sure. Definitely, especially if it does better, which it probably will in the future. But right now at this price, I think it's a little bit expensive. I think I would probably pass. But again, a fantastic company that does require a little bit of a discount in my view. Maybe I would be willing to buy it though, yeah, at about $200 because again, of how great the company is, again, the fantastic margins, pretty good growth levels even at this rate. It probably makes sense to pay more to get a great company, but you probably don't want to pay that much more. This is a pretty big difference here. And so, yeah, I think I will wait it for a while, but if it reaches the $200 mark and even less potentially, that may be a pretty nice opportunity. But thanks for watching. Do tell me what you think about Microsoft. And remember to leave a like and subscribe, and I'll see you in the next one. Bye-bye.